Hi, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Very happy to see you guys on a Friday evening once again. Today it is the 18th of November 2022. So if you guys can hear me loud and clear, please say a hi to me in the comments in the chat. This Facebook Live, and also YouTube stream. Also, it is broadcasted to two sites. Okay. Either way, if you're on YouTube or on Facebook, you can hear me loud and clear. Please say a hi to me in the chat box. Okay, I'm friendly. I won't bite. Okay, let me take a look at the comments right now. Hello, Dave. Hello, Pei Wen. Hello, Emmanuel, Desmond, Manfred, Chun Lai, CJ. Okay, SP Wei Lun. All right, Mark, SJ. So yeah, don't be shy. Okay, I won't bite. Say hi to me. Engage with me. Okay, give me a like, share, and comments. Okay. Liking tells Facebook or YouTube that you want to engage with me. Okay, if you don't give me a like, engage with me, after a while, Facebook and YouTube, they will not show you any more of our MarketWise Asia feed already. So just engage with me, okay? David Gans, Steven, thank you so much. Okay, so yeah, I think today CJ asked me in one of the comments, right? Will I be still doing my Facebook Live, YouTube stream during the World Cup season? That's a very good question. I'm not sure what's the timing of the football matches. Is it like 11:30 to midnight the timing? Okay, if so, okay, I think I'll still do lah. Okay, I think not all people will watch football. I will watch also lah, but for on Friday evening, then I'll just skip lah. I'll spend my time with you and do my sharing with you. All right. Okay. Pauline, SP. Hello, Yu Yang. Okay, so fantastic. So today, right, as usual, you can see on the screen over here, this is proudly sponsored by Nasdaq. And today, we also have a special guest, okay, Cher, the APAC Head of Product and Support Investment Intelligence from Nasdaq. Okay, we'll share with you more on the Nasdaq TotalView and depth data also. Let me try to invite him out right now. Okay, hi, Cher. Hi, Cher. Say hi to everyone.
Hi, everyone. Can you hear me?
Yes. So once again, if you can hear Cher from Nasdaq, okay, just type me in the comments so that we know everything is good, everything is well. All right. Okay, fantastic. Let me see. Do live stream of watching World Cup with us. Cher, do you watch World Cup also or not?
Oh, definitely. So looking forward.
I think I understand you are a Liverpool fan, so definitely you're gonna watch World Cup also. Anyway, I think it's November and December. Everybody's kind of Christmas season, chilling. I think it's a good time to enjoy yourself and watch some of these soccer matches as well. Okay, so without much further ado, Cher, do you want to try screen share? Okay, and then you can kick off the session.
Okay, let me do the screen sharing now.
All right, so I believe you guys can see his screen right now. Okay, and this understanding the depth data. So over to you, Cher. I'll see you in a while.
Yep. Thank you so much, Alex. It's great to be back here again tonight. Hello, everyone. My name is Cher, Head of APAC Products and Support in the Investment Intelligence Division. I think this is part of Nasdaq ongoing investor education effort for the APAC investors. And today I'm going to share with you about the understanding of the depth data in the US market part 2. Just to recap what we have covered in part 1, I've shared about the US market structure and why it is important to have some insight of it. Essentially, there are 17 trading exchanges in the US market, and trades can occur both on and off exchanges. Only the on exchanges trades are in consideration for the depth data. I've also shared on the US trading sessions and that the majority of the trades occur during regular trading hours, more than 90% of the market. The regular trading hours also exhibit the most tighter spreads, and I've also highlighted that trading in the pre-post market is riskier due to low participation and price volatility. But for tonight, I'll be covering part 2 of this series, which is the understanding of price formation and depth share, as well as sharing some key metrics and insights. Let us get on with today's agenda. Before I start with this slide, can I do a poll, for today, if you are getting depth data, or what we call level 2 data for trading the US market. So maybe I need to engage the hell of Alex and see whether the response from the audience, whether they feedback that today they are getting any depth data for their investment decisions.
Yeah, so I think Nasdaq depth data is routed through several brokers, right? Do you know that actually some of the data you get are actually from Nasdaq as well? I think it is from Mumu. Is it? Am I right, Incher?
As well, definitely.
Yeah, and some brokers. If you know, okay, just type yes in the comment. If you don't know, okay, just type no in the comments. It is fine. So later Incher will explain to you as well. Okay. So do engage with us, okay? Give some interest, some support as well. Special guest from Nasdaq today. All right. If you know some of your data is from Nasdaq, just type yes. If you don't know, just type no. Yeah, I can see Manfred saying no from YouTube. Okay.
So if you're not, then you're definitely not empowering yourself with the right information for your investment decisions. But let's move on.
Yeah, I think most say no in the comments. Okay, so it's Incher, back to you to introduce them how Nasdaq can help them.
Thank you so much. Depth of book is important because it provides insight into the true supply and demand for a particular security, right? For example, Apple, Amazon, and so on. 3 separate measures of price formations helps investor to understand the depth of book, or what we call the depth data. They are essentially inside the BBO, within 1% of the MBBO, within 10% of the MBBO. So what is MBBO? I mentioned this vaguely in part 1, and that's the National Best Bid and Best Offer. So firstly, the insight of the BBO, MBBO, or better. So price improvement occurs when a buy order is executed at a price lower than that best offer, or a sell order is executed at a price higher than the best bid. So better than the MBBO. So using both Nasdaq and NYSE ARCA cumulative depth data share as the universe of depth data of the market, the chart you see above shows that Nasdaq, using the Russell 1000 component stocks, Nasdaq depth share is 64.1% compared to NYSE ARCA at 35.9%. So what does this mean? This means that price formation for prices better than the MBBO are contributed mainly from the Nasdaq market depth. Moving on, within 1% of the MBBO. So this basically is the leading metrics that indicates the quality of the depth data. Using the same component stocks of the Russell 1000 again, it shows that Nasdaq TotalView, or our depth data products, has over 68.3% share based on volume of the depth order, while NYSE ARCA only has 31.7% depth share within 1% of the MBBO. Again, this means the price formation for prices within 1% of the MBBO are contributed mainly from Nasdaq market depth. Finally, within 10% of the MBBO, this metrics basically provide an investor if those orders are less likely to get executed. The answer lies in technical analysis. So a lot of technical analysts looks at this chart to determine key support and resistance level within the order book. Support and resistance level within an order book are typically large orders that act as majority indicators of supply and demand. They can also indicate a trend reversal. So do not underestimate the depth order, especially within 10% of the MBBO, because even though they are far away, the price depth, they do gives a lot of, I would say, information with regards to support or resistance level. So finally, most of the liquidity within 10% of MBBO exists on Nasdaq depth data and not in NYSE ARCA depth. So last but not least, Nasdaq TotalView provides a level of granularity in the market data, which provides insight into the price away from the MBBO, as well as what the market can do in the future. Moving on to my next couple of slides. I think during part 1, I shared that spreads of the Russell 1000 component stocks. In this slide, I've included the average spreads of the Nasdaq 100 component stocks, the S&P component stocks, as well as Chinese listed stocks in the US market. As Nasdaq trading system is tighter than that from NYSE ARCA, you can see that the other three component stocks, as well as the Chinese listed component stocks, exhibit tighter spreads. Previously, I highlighted that tighter spreads begets trading volume. Is that true? In the next slide, basically, it is true enough. This is exactly what we see among the same component index and the Chinese listed stocks in the US market. Nasdaq trading system provide the most traded volume across these three components index, as well as Chinese listed stocks. To conclude, Nasdaq TotalView or Nasdaq proprietary depth data product is the best-in-class depth data product in the US market. Finally, I hope that over the last two sessions that you have gained more insight into the US market, especially understanding the depth data and how it could potentially empower your investment decisions. Do consult your investment advisors or broking firms about the Nasdaq TotalView depth data product. With our best-in-class data, you will get even better empowerment of yourself with the right investment decisions. Lastly, if you are looking for more content on the US market, feel free to visit this website. Thank you. Alex, I'll hand over the time back to you. Alex, I think you are muted.
Sorry about that.
So
very sorry about that. I forget about the mic. So once again, thank you, Cher, for your sharing on the Nasdaq total, the total view and the depth data. Okay, and so thank you for your sharing once again, Cher. I think it's 11:43. Thank you for staying with us for today's Facebook Live, and I will see you again next time pretty soon. Okay, thank you for sharing today, and see you again. Bye bye.
Bye bye. Bye bye, everyone.
Bye bye. All right, fantastic. So by the way, right, for the Nasdaq TotalView, right, it is a standard Nasdaq data feed for serious trader. It can display the full order book on Nasdaq, including it shows you every single code and every price level in the Nasdaq, the New York Stock Exchange, okay, and other regional listed security and Nasdaq. And beyond level 1, there are more than 20 times the liquidity at level 2, and Nasdaq offers the most complete market book with all the information you need, okay, to bring your decision to the next level. And actually, I think some of you might not know, okay, you can access TotalView through some of these Nasdaq partners. For example, Mumu actually is using Nasdaq data. Weibo, okay, is using Nasdaq data. TradeStation, TD Ameritrade, okay, and Robinhood as well. So I think by now, if you are using Mumu or Weibo, okay, which is quite popular, I think in recent months, okay, it is using Nasdaq data, okay. So that's all for the Nasdaq information over here. All right, so I hope you guys get some. Tiger, I'm not too sure as well. Tiger, I'm not too sure. Okay, so let me continue my sharing today. Let me add this to my streaming right now. Once again, we have about 175 people in the room right now. Give me a like, share, or comment before I really kickstart my session on the market outlook and such. Okay, once again, disclaimer first, whatever I share today is just for education and information purpose. It is not recommendation to tell you what to buy or what to sell. So please do your own due diligence. Alex might not be right, okay? All right, so please do your own diligence. If everything is okay, you agree with me, just type okay in the comments to engage with me, okay? Entertain me a bit lah. All right, so once again, we have our Telegram channel and also our YouTube channel. So I'll post the link in the comments. All right, so by the way, during the Market Insights Virtual Summit, right, I mentioned that if you subscribe to our YouTube channel, you stand a chance, okay, to win the MarketWise next flash pay card over here. In fact, I posted a video already, okay? I just posted today, so do check it out. You know how you can win this next flash pay card that's preloaded with $10. Okay, I won't disclose too much. Okay, just head over to our YouTube channel and you able to find a very simple steps to win this next flash pay card. Once again, I'll post the link in the comments in the chat. Okay. All right. So I also have this insider cost to technical trading. I believe those who attended my session last week should know already. So this is the insider cost to technical trading. Let me post a link in the comments also. So this will be this is what you will see on the landing page itself. Okay. So this collaboration with IG. All right. So there's 11 module over here. Okay. So investing versus trading, the 4 different types of traders, the 4 different stages, trend analysis, okay, support resistance that I don't draw horizontal lines, okay, all right, the key moving averages, okay, the number 1 candlestick pattern that you should stay away from, how to follow the smart money, how to uncover trend, condition, breadth, and sentiment in one glance, okay, how to manage your risk and protect your capital, okay, and how to get started, obviously, all right. So yeah, once again, I think you should be able to see the link already. By the way, once you just click enroll, all right, first name, email, and mobile, you'll be brought to a page where ask you to create your email address and such and password. So just do that, and you'll be able to access the course. Okay. All right. So let me continue over here. All right. So let's get started over here. So of course, why the market actually came down for the past 1 or 2 days for this week actually is in fact based on the Fed's Bullard. Okay, it says that it requires more rate hike. Okay, I believe again this is not really new news really. So if you have been watching the market, right, you should know about this. Let me just post the link now. So okay, Fed it is more hawkish. Okay, they think that the Federal Reserve should hike more, okay, to contain inflation over here. So they are giving okay a range between 5% to 5.25%. All right. The current level just below 4% is sufficiently restrictive to curb inflation. So they think that they need to hike more, 5% to 5.25%, and this again spooked the market. But what I'm seeing right now, the market it is still handling this information pretty well. So if I'm looking at the chart right now, the S&P, Nasdaq, they are still holding pretty well. Didn't really dive down straight away. Still holding pretty well. Okay. So in case you want to know the link, this is the link. I'll post the link in the comment. All right. So whatever it is, right? Okay. I mean that the market it is. I think okay, it is pretty used to the Fed hiking interest rate. Okay. So this is not something. This is not new already. I think the market is also kind of a bored already. I mean that seen already. Okay. I know that the Fed is going to hike more. Okay. Yeah. Anyway, I know another concern is that about recession. So the Fed, there's this thing called when the Fed pause before a recession. Okay, when the Fed pauses, tend to be positive for stocks, and when the Fed cuts, okay, are negative before a recession. So in fact, when the Fed is still increasing interest rate, it tends to be positive. Okay, for stocks. Okay, all right. I will show you the chart. I will show you the chart right now. I'll show the chart now. So let me find the chart right now. All right. So this is the chart. Okay. So can you guys see the chart? Okay. Not the clearest resolution, but you get the idea over here. So can you see that overall since 1980 something, okay, 86 until right now year 2022 over here. You see when the market when the Fed in fact increases the interest rate, okay, the market still continue to hit higher until, okay, the Fed pauses, okay, all right, the market will start to go down. Okay, I didn't superimpose, but you get the idea. All right, I just tell you, and then the recession will come over here. Once again, over here in .com, just before the .com crisis, the Fed actually increased the interest rate, so the market still continue rising. And once they pause, okay, they pause the interest rate. Okay, that is where the market actually pivot. What they call pivoting. Okay, I think one of the most used word in 2022 is Fed pivot. People are looking for Fed pivot to decrease, to reduce the interest or at least pause the interest rate. In fact, based on historical data, it is actually bad for the market. And then subsequently, recession come, and then the Fed has to reduce the interest rate. Okay, lower the hike. Okay, lower the interest rate. Okay, and once again during the before the 2008 great financial crisis, all along the way, the market also continued to go higher, the Fed also increases the interest rate, okay, until the Fed pauses, or this is where, where the recession comes, the great financial crisis come, okay, yeah, again, this is once again the same and once again the same. So right now, I think we should be still pretty happy that the Fed, it is still increasing the interest rate, okay, yeah. So when it start to pause, I think that's the time that you should be more concerned, because that's the time I believe the Fed think that, hey, the market is not doing very well. We might have to pivot and start to reduce the interest rate soon. All right. And of course, recently there's this tech layoff. I'm sure, okay, if you've been watching the news, okay, don't talk about financial news, just even Channel News Asia or even Straits Times, you should also know there's this tech layoff. Meta, which is Facebook, is laying off tens of thousands, 10,000 staff. I think what is this? Amazon, okay, is also laying off. So I have this interesting site over here, right? This is a layoff.fyi. This is a very unique, okay, domain name, layoff.fyi over here. Let's go to the site and take a look over here. You show you the, who are the companies they are laying off, people, okay? So you can check between, okay, in 2022 or since COVID-19. Since we are just interested in this year, I'll just do 2022. All right. So it looks very similar to, just Excel spreadsheet. Okay. All right. But you can, also sort it out yourself. Okay. So let's take a look. Let's go by the latest date. Okay. Sort from 9 to 1. I think this is the latest over here. Okay. All right. So can you see? Yeah, see, can you see over here? Meta, not the latest, since 9th of November. Let me try to zoom in. All right. Can you guys see the chart? Can see, right? If you guys can see the chart, just give me some okay or whatever comments so that I know everything is good. So can see the chart clearly, right? So can you see? All right, Meta is here. And then, yeah. So these are all the companies, tech companies, they are laying off people. Like Amazon, can you see over here? Amazon, all right, 10,000 people. So on and off, Roku, some of the things I've never heard before, okay? All right, SimilarWeb, Cisco, Asana, all these are laying off. Cisco, okay? It is also pretty interesting. It is laying off 4,100 staff. All right, they'll tell you the source as well. Where do they get this data from? All right, what else? UniPath, all right, Oatly, didn't really say the numbers. Okay, let me see what are the things over here. Okay, go to group. These are the bigger layoff. Let me try to sort the layoff. Biggest one. Okay, of course, Meta, Amazon. This is during COVID. Cisco, Twitter is laying off 3,007. Uber, 3,007. Okay, Peloton, 2,008. So all this combined together, I think a lot of people are laying off. Total, I think it's about 23,000 people getting laid off. Yes, Payone, yeah, Twitter also. That's right. So as such, right, I believe, along the way, within the next few months or so, I believe the unemployment rate will increase. Okay, how many of you think that within the next few months or so, okay, you think that the unemployment rate in the US will go up? If you think it's going to go up, just type up in the comments. If you think that you maintain or even go down, okay, just type down. Okay, or just stay the same. All right. Right now, the unemployment rate in the US. Unemployment rate, US. Okay. Take a look at the chart. Unemployment is still pretty low. It is still pretty low at 3.7%. Okay. Same up. Let me see. Up. Mostly say up, down. Okay, Henry, why do you say it will be down? Okay. Anyway, I think there's no correct answer. Nobody knows the answer. I'm just asking for your opinion. Okay. I believe it will start to creep up. So, okay, I'll start to creep up. So let me find the link. I forget the link already. Unemployment rate. Okay, unemployment rate. US. This is the one, unemployment rate using this Fed economic data over here. So I think I mentioned before. Okay. Right. There are many data that, but all these data are lagging that can tell you whether we are going to head into a recession or not. So I think this one previously, okay, Larry Williams also mentioned this, okay, before, right? Can you see that when the inflation when the unemployment rate start to go higher, okay, the recession will come, okay, goes higher, recession will come, okay. I won't go so far ahead away, okay. Can you see the latest recently one like 1990s, okay, when the unemployment rate start to creep up, okay, then you start to recession. Okay, the gray lines are recession, head up, recession, head up, recession. So right now we are still at a pretty low number, haven't really hit up, but do you realize that by the time you can see that number going up, we are already in recession already. So it's like it doesn't really have a predictive power now, okay. And of course the most talk about it is recession. Is recession going to come? Of course previously I mentioned that the 10 years minus 2-year yield, okay, it is already inverted already, which I mentioned before also. This is the 10-year minus 2-year yield, okay, it is inverted, okay. I think I mentioned many times already. So if you don't know, basically this is like a leading indicator where the 10 years minus 2 years, the yield, okay, it is below zero. It means that there's inversion, and a lot of times, okay, within the next, I don't know, 6 months, 1 year or so, there could be a recession. But recession, I also see some groups that say that, hey, recession is coming, it's going to get worse and such. We should not, we should avoid stock. Okay, it's going to, the stock market to come down even further and such. Is it really true? Is it really true? Okay, again, just entertain me a bit. Okay, when the neighbor, okay, neighbor, it is national. What is this? National Bureau of Economic Research announced recession. Do you think, okay, the market will continue to head down or head up? Okay, all right. So, all right, let me go back again. Okay, yeah. Okay, so I want to share with you is this. Too many things. Okay, let me go over here. Yeah, okay. How does neighbor define research? I mentioned that before also. Okay, so I will skip through that. All right, I'll share with you the more important one. Okay, which is this number one. All right. In fact, when recession are short-lived, the community typically announce them after they are over already. Okay, I repeat. In fact, when recession are short-lived, the community typically announces them after they are over. All right. So do you think recession is the best time to buy? Okay, in fact, I feel when the neighbor, how do I pronounce that? Okay, nabe or neighbor, doesn't matter. Okay, neighbor announce recession, I think that's a good time to buy. Actually, in fact, okay, this is just my personal opinion. Okay, so I think I shared this chart before. So let me just pull this chart once again. This, okay, let me just put this chart over here. All right, so can you see the chart over here, right? So be it whether it is in a early recession, okay, recession, we are actually already in a late bear market. And okay, we are, if you are into a full recession, typically the market will bottom way before the full recession, okay? Then by the time it's full recession, the market is already on the way going higher already, okay? All right, so you might think that, hey, it is really true or not, or Alex just talk out only. This is just based on theoretical data only. So I have some data from over here. Okay, this is from the this side over here. Okay, so this is from the current market valuation. I know this site through James Yeo. All right, the speaker at the Market Insights Virtual Summit recently. Okay, 3 weeks ago, he mentioned about this website, current market valuation. Not a bad site. You can take a look. I'll post the link in the comments. You can take a look. So this is the stock market performance during a recession. All right. So of course, they define about the U curve, defining a recession. As I mentioned, right? Okay, it is not just by a recession, is not by 2 quarters of sequential GDP contraction. It used to be like this lah, but however, nowadays, okay, it is announced by the neighbor, okay, and National Bureau of Economic Research. So they do not have any rules. They didn't tell you what are the rules, the parameters they will call a recession. They never announced that, okay? They never tell you, so it's secretive, okay? Right, so the U curve inversion and such. So, right, so this is what a recession look like. So just focus on this chart over here, okay? So the longest recession in recent history, right, it is actually the 2008, all right, financial crisis, where, you know, the recession lasted for about, you know, 554 days, okay? That is like more than, you know, 1 year plus 2 years, that kind, all right, 1 year plus, okay? And then most of the time it is pretty short-lived, like over here. Can you see over here? Pretty short-lived, less than a year, that kind. Okay, less than a year. Can you see it's about 240 days, that kind. All right, so yeah, okay. I forget. I think they have a number over here. Okay. The longest is 546. The shortest is on record. The average recession ends up after 312 days. So somewhere around there, okay, average, okay, somewhere around there. Still less than a year, somewhere around here. But one thing I want you to take note is that what do you see, okay, in this chart, okay? All right, so you see over here, this is the whole recession. Let's, for example, 2008, this is the whole recession. So by the time it ends, okay, it is over here. By the time it's end, it's over here. By the time it's end, it is over here. By the time it end, it is over here, right? Over here. So any peculiar thing or something that you notice, okay, you notice on the recession data or not, all right? Okay, stock performance, S&P performance during recession, all right? Anything you can notice from this chart or not? I'm trying to zoom in. You can see clearer, right? I think you should be able to. Anything that you can see or not? Anything you can notice or not? I take a sip of water. So right now we have about 215 people on YouTube, on Facebook. Give me a like, share, or comments. Right now I only have about 50 likes only. You want to give me angry face also can, no problem. Angry face also can. All right, as long as you engage with me. No answer, really no answer. Okay. Fantastic. All right. Nian Yu say price already go up during recession. Awesome. This is the answer that I want to hear. All right. So can you see or not? By the time the recession, all right, market correct. They say market bottom first. When the recession ended, market already took off. This is exactly what this chart is about, right? Right. So when it is full recession or ended, okay, the market has already gone up already. So can you see over here? All right. So when the recession ended over here, the market already bottomed way before. When the recession ended here, market bottom somewhere around here and go up already. So you cannot wait until the recession it is over, then you buy into stocks. That is too late already. All right. And then so average, so it says that, okay, bottom about 169 days. Okay, 169 days. All right. So this is what the dotted line means, okay. So typically at the end of the day, it is, you know, market tends to bottom, okay, way before the recession ended, which means, okay, in my opinion, to me, it's that neighbor, Nabe or what, MB, you just tell me that it's a recession, okay, I'll be more than happy, so that at least I know that, you know, I can buy soon, okay, I can buy soon. Now you don't tell me whether it's recession or not. I'm still like guessing, okay, there's still room for the market to go down. Once you tell me that it is a recession under you know, it is it's about time already, okay, I cannot wait until the recession is over, then I buy into stocks. You agree with me now? If you agree with me, okay, just type A in the comments. Just type A in the comments. Once again, I will share this link in the comments. In the comments, you can check out yourself. You know, some other data over here. You can check it out yourself. Which means okay, at the end of the day, people are worried about this recession and such. Don't need to worry lah. Okay, don't need to worry about this recession. You want the MB, okay, neighbor to actually announce a recession as fast as possible. Okay, don't delay. Really. Okay, this is what actually during the Market Insights Virtual Summit. Okay, this is also what Alvin mentioned from Dr. Wealth about that. You want to tell us, just tell us that there's a recession. Okay, don't keep holding on. All right. So in short, so what do I mean by that? In short, my summary is that you need to watch the price action. Okay, don't always hear the news, recession, layoff, and so. Of course, in the coming months, I believe there might be more layoff. But again, okay, that might be price in already. Why do I say price in already? It is because this year, I'm not sure about you, right? Do you realize that every time, okay, even though there's a market correction, market crashes, every time the scenario is a bit different. All right. So during 2020, during the COVID sell-off, all right, all right, it is very fast, very swift, pump. Okay, very fast. Okay. So this time around, people are expecting that, hey, it's going to be the same like this. But, the market doesn't really, repeat exactly the same thing twice. Exactly the same, doesn't repeat the same. So this time around, okay, the market, it is, going down in a very orderly fashion. Okay, orderly fashion. Okay, so it's like, don't use a knife to stab you, to kill you lah. Okay, it is like using a small little fork, just poke, and poke you until you are damn irritated. You see, so it's just killing you softly. Okay, going down, and by the time all right, the Nasdaq, it is already down, like like at the low is about 35% already. Okay, all right. So HK asks, what happened if there's no recession? Then that's the best, okay? You watch the price action now, okay? So later I'm going to show you something also, so whether you can use it as a contrarian indicator as well. So right now, I'm not sure about you, but people are actually very fearful about the market right now, okay? So people are expecting that price will go down like this, okay? Pump, you want to kill me straight, okay? But I don't think the market will do like this. Once again, I think that even if it's going to go down, I think that it is going to grind down slower, that makes you give up, that kind of thing, which I mentioned already. The capitulation didn't happen in the stock market, it happened in the bonds market. All right. So I'm not sure about you, right? The equity put call ratio is at the highest record right now. It is even higher than the 2008 great financial crisis. So equity put call ratio, which means that a lot of people are very, very bearish on the equity market because they put call ratio, this is the ratio, right? So if it is very high, which means that a lot of traders, investors, institution, finance company, I don't know then, okay, doesn't matter. They pile in a lot of put options. That's why it is the highest, okay? So you can get this data on stockcharts.com. All right, the ticker is a CPCE over here. So let's go to a stock chart over here. All right, stock chart over here. Okay, so just key in CPCE. All right, so this is a CBOE options equity put call ratio over here. All right, so you can do some settings you can do for the past 20 years. You can take a look at 20 years, then weekly time frame. All right, then you just update over here. Okay. All right, so a lot of lines doesn't matter. You just look at the peak. So can you see over here or not? Okay, this was the 2008 financial crisis. The ratio was 1.35. Okay, all right. Even during the COVID sell-off, the put call ratio, it is only at 1.28. Okay, and right now it is at 1.46. It is at 1.46. So this is the highest level ever since this CBOE, okay, I believe so, started recording this put call ratio. So I'm not sure about you, okay, this sounds like a very contrarian indicator to me, which means that way too many people are too bearish already, okay. Of course, not everyone, most of the people to make money in the market. Cannot be everybody, buy put and make money one. Okay, cannot be one. I believe so. Okay, which means that for me, okay, I am more gravitating more towards the bullish side. Okay, all right. I'm not sure about you, but you do have to agree with me, because right now, as I mentioned, I think a lot of times really the market, it is still very divided. All right, on Facebook, on YouTube, I can see people telling me, hey, the bear market is not over yet. Okay, the bear market is not over yet. Okay, there's more downside to come. On the other hand, there are people who is bullish, and this is good. This is good. Okay, if everybody is bullish, then the market is going to collapse again soon. Okay, so divided opinion is good. Divided opinions, I repeat, divided opinion is good. So for me personally, you do have to agree with me. Okay, and I do have a crystal ball. I'll just trade what I see. But for me personally, as I mentioned during the face-to-face physical live session, I do have a crystal ball. I cannot see so far ahead, but at least until the end of the year, I think we will be higher than the current level. Of course, I don't expect price to go out like that. Okay, I don't expect that. Maybe grind a little bit, go higher up. So which means that the October low, okay, could be the swing low, okay, for at least until the end of the year. Okay, this is just my personal opinion. Okay, so if you understand what I'm trying to say, just type OK. Just type OK in the comments. Just type OK in the comments. Oh, so fast, 45 minutes already. Just type OK in the comments. All right. Anyway, today market is divided. It's quite flat also. All right. So give me a like, share, or comments. Okay, do engage with me. Okay, can. All right. So yeah, I'm not sure about you, okay. You can tell me whether you are bullish or bearish. That is fine as well. So let's hit back to the market right now. So which one you talk first, S&P or the Nasdaq? I think both also fine lah. Okay, S&P 500. This is a naked chart. All right. Yeah. So do you realize that previously I mentioned that the market breadth is at a high already? So I mentioned that the market might have limited upside during the booster webinar last week. Okay, J-Tune, okay, the stock god, a term that I call him now. Okay, because yeah, I think he's very good in stocks also. A very good friend of mine. If you're watching me and him, you should know that you should know our style. Okay, so me and him ideas that we have limited upside. Okay, the market breadth is somewhere near the top already. So it has proven to be right. Okay, the market can't really go higher for this week. Okay, again, all right. So the latest update I posted on the Telegram channel over here. So this was posted like 16 November, right? 2 days ago. Okay. So I mentioned that, the risk reward is not very good. If you go long, personally, I close out my long position, no position, then I suggest that you don't chase. So these are very time sensitive, information where I can only post in Telegram. I won't be posting on the Facebook page. All right. So once again, if you're watching, do subscribe to our Telegram channel over here. Okay. The latest update I'll post on Telegram channel. Okay. All right. So as of now, the market breadth, it is still on the high side, still on the high side. So, okay, so can see over here. I'll keep jumping here and there. Okay, you just follow me. It's fine. Okay. Okay, market breadth. All right. So, market breadth. No, actually it's dropping a bit. Okay, not too bad. Anyway, so this is the percentage of stocks above the 50 days moving average. So previously I mentioned, right? So we are somewhere near the high. Every time near the high we have correction. So not exactly at the highest, but somewhere near the high. If the market want to go higher, still can go higher, but the risk reward is not there, can go down lower. Okay, I mentioned that before already. So okay, so what I'm to tell you is that, okay, sorry, the chart over here, S&P. Okay, the market, okay, looks quite resilient to me right now. It looks quite resilient, okay, to me. Okay, once again, there's some candlestick pattern that I don't like, okay. So this is I don't like this shooting star, because I don't like this pin bar. So if you know what I'm talking about, candlestick pattern, shooting star, and hammer is one of my most disliked candlestick patterns. So I will explain to you why, okay, in the course itself, which is Is it here? This one, okay, over here. All right, the number one candlestick pattern that you should stay away from. Okay, so if you are new to here, okay, this is a free course. I will share with you the direct link over here. Right, just register yourself. Okay, right. So from here you cannot really see much, but let me add in my usual indicator. Okay. All right, so then you can see already. Okay, ignore the lines over here. Okay, right. So can you see that for the S&P 500, price broke above try to break above the cloud, right, and broke above the cloud, and right now it's holding well at the cloud support area over here. Okay, so the whole area here actually is a very strong support. So right, because the cloud is actually flat, it is flat over here. This flat, normally flat cloud, it is a very strong support area. I repeat, flat cloud, it is a very strong support area. So you can type flat if you understand what I'm trying to say. Did I mention this to you guys before? All right, when you see the cloud, okay, it has a flat surface, horizontal one flat, it is a very strong support, right? Just type flat in the comments, okay? Nasdaq, you can't really see, okay? Nasdaq, it is still below the cloud, okay? And Dow, the strongest above all, it is already above the cloud and above the flat cloud support. Yes, thank you, Wiki. Flat cloud, it is a very strong support. That's right, very strong support now. Okay, and then take a look at the Russell 2000. Okay, can you see over here? Previously, when price wanted to break above the cloud, acting as a resistance, came back down. Okay, the CPR, central pivot range, acting support, and right now price broke above the cloud, and right now the cloud is also at a flat cloud area. Can you see? It is a very strong support area. Can you see that price hit the cloud level, hit the CPR, and then it rebounded. And today, okay, actually, okay, the small cap stocks, okay, the small caps are still positive, pretty strong. It is up 0.75%. It is up 0.75%. So this is still positive to me. It tells me that the market, it is still in a kind of a risk on method, still in a risk on mode. Sorry, it's in a risk on mode right now. Okay, all right. So can you just type risk on to me? Just type RO risk on to me. So it is acting as a very strong support. Okay, which means, okay, if the support cannot hold, all right, then of course the next level will be at the central pivot range. All right, for the Russell 2000, it is at about 1786. Okay, 1786. But I think most people don't watch this Russell 2000. So in fact, I'm watching the Russell 2000 also, because it tells me whether the market is wanting to go for risk on or risk off. So right now, it seems that the market still favor the small cap. It is still pretty strong. Risk on mode is still on. Okay, and then for the S&P, okay, once again, all right, if this cloud support cannot hold, all right, which is somewhere about okay, 3,900 level, okay, which is also a very obvious support level. This is a past, okay, past resistance, past break over, now become support, trying to test that. If the market cannot stay above this level, then I think the next level, I'll wait for it to go to the central pivot range over here, which is at about 3770, 3770. So we will see how it goes. But right now we are in the midst of November already. All right, so it's November already. So I repeat, 3770. Okay. CA is, are you new to my Facebook Live? Yes, this is Ichimoku. That's right, Ichimoku. Okay, Ichimoku Cloud. So Mark Ching, this is the standard Ichimoku Cloud. So yeah, I did some modification. So I removed some of the lines over here. So for those who are new to MarketWise Asia, or for those who are new to me, I have this tutorial over here where I share with you how I install the cloud, the central pivot range, and the pivot points, right, on trading view. I'll post the link in the comments. You should be able to see that. So this is what I'm watching out right now. Okay. So personally, I think it could hold. All right. I think it could hold. All right. And then market might just continue to head higher and squeeze and squeeze the best. This is my personal view, okay? Even though the breadth is at a relatively high level, I think it can still go a little bit higher. Okay, I still think it can go a little bit higher to squeeze the best. Okay, I see some Facebook group, they keep saying that this is an irrational rally. Something is not right. All the tech companies are laying off people. This is just not right. How can the market continue to go higher? Okay, again, I'm a technical trader. I don't care about the consensus. What I care is that what the price is telling me right now. Okay, because I trade short-term market right now. I trade for a few days. Okay, a few days to about 1 to 2 weeks. That kind swing trade. So fundamental wise, it is not that important to me. I just want to catch that swing up. All right, okay. So, and of course, the inflation people always talk about. I think it is, we have already kind of peaked. Okay, and today you can see that crude oil, it is also going down. Previously, people are saying that hey, crude oil might go to $100 plus. Okay, but so far it didn't seem so. Can it go higher in the future? It could, but right now it is coming down, so it is hovering pretty stagnant there. All right, haven't break the low yet, so it's kind of consolidating. All right, so the crude oil, the natural gas, okay, it is also at a consolidating low level. Okay, gasoline, gas, it is also at a low level. So if you want to have a broad view on what the whole commodities are doing, which I already put on the okay, DBC, DBA, DBP, DBP. DBC is commodities lah. DBC is commodities. Okay, so broad-based commodities. All right. So okay, so it's ranging. So I believe, okay, inflation, we might not go to 2%, 3%, that kind lah. So not so fast, but I believe we won't go above 8%, 9%, that kind. So it should continue to go down a little bit lower or at least flat. Okay, for precious metal, how about agriculture? DBA, agriculture. Okay, the grains, the wheat, the soy, we are also kind of ranging. Okay, we are also kind of ranging, but also not going higher. So I believe inflation has kind of peaked. Okay, and then DPP, precious metal. Okay, recently it is facing an upsurge, but okay, not the most important of all the commodities. Okay, precious metals. I believe the pullback is due soon. Okay, which I mentioned that if you want to buy precious metal like gold, silver, a better time to buy it is due at the end of November towards the start of December. I mentioned before. And also the base metal, DBB, right? This is like copper, aluminum, and such. Okay, going a little bit higher, but generally it is still kind of ranging over here. All right, so okay, let me go through this metal with you lah. So this is the stock chart over here. Let me go to, let's say for example, gold. All right, gold. The seasonality. Okay, I go to the okay, so this is by the way, this is not free. This is from Larry Williams template. Okay, anyway, just show you. All right, so can you see over here? I think I mentioned before also lah. So this one, seasonality until the end of November, December, then the seasonality for the precious metal will go up. So I think right now it might still come down. So don't be so anxious to go long. All right, so yeah, okay, and until about the start of December, that kind, then maybe you can look into precious metal, gold, silver, that kind. Okay, All right, so if you are enjoying my content so far, if you enjoy my content, just give me a thumbs up, or just give me a like, share, or comments, or just type value in the comments. Okay. So DB, as I mentioned already, DBC, DBA, DBP, okay, DBBR. So these are the things that you could take a look at a broad-based level, see what are the commodities it is doing. And of course, sometimes you don't have to always just trade stocks. For me, I've been trading the forex, commodities as well. So looking at the DXY is something that is of interest as well. So as I mentioned, right, DXY dollar index have a inverse relationship with the equities market. This year, when the dollar go up, the stock market go down. Dollar go up, stock market go down. Okay, so you can see at the DXY. Let's take a look. DXY over here. Okay. So I mentioned before, right? Last week, okay, market has always stayed above the cloud, the Ichimoku cloud uptrend, above the cloud uptrend, above central pivot range uptrend. Right now, we are below the cloud. Okay. But, okay, don't be so anxious to short yet also. Okay, even though I have a short position. Okay, I'm just taking a bet. Okay, don't copy me. On the 2-day time frame, we are hitting near the support level. Okay. By the way, this is a 2-day time frame. 2-day time frame. Normally, people see 1 day or 1 week time frame standard. I also look at the 2-day time frame. I think there are some people asking me about this 2-day thing. They are quite confused. Okay, during the face-to-face physical seminar. So it's very simple. Okay, 1 day, 1 week, it is what normally people watch. But I also watch a 2-day time frame. 2-day time frame. Okay, so it is somewhere near the support level. Okay, for the dollar yen 2-day time frame, not yet. Okay, but coming down, there might be a bounce. Okay, but personally, I think the market, the dollar might continue to drop further. So the reason it is because, okay, all right, of this pin bar over here. Can you see that for the dollar yen, it is hitting the cloud support over here, and then price do a small rebound. Can see or not? Can see how we can see, but okay, what do you guys see on this candle? What candle is this? What candle is this? Okay, some people say it is a pin bar, okay, or some people say this is a hammer, or some people say this is a doji, or some people say this is what, a tweezer. I don't know lah. Okay, anyway, to me, this is still look like a hammer candlestick pattern to me, because the shadow here is very long. The shadow here is very long. Okay, all right, which means that a lot of traders, most likely amateur traders, okay, they will place their buy order here. I see a candle, bullish candle. Okay, they see, wow, bullish, they can buy. So their long is being triggered already. You can see or not? Their long is being triggered here. They will buy above the high of this hammer candle, okay, and then triggered. Okay, price cannot rebound, and then hovering for a while. Okay, all right, hovering for a while. I believe, this is my personal view. I think the dollar might have more downside to come, okay, and then go down, and at least you'll test the low of this hammer again, because this is where most of the liquidity is. Okay, all right. Amateur traders buy here, put their sell stop order here. Okay, all right. If the professional trader shorted here, okay, if they want to cover their position, they need the liquidity to cover. If they sell, okay, they need to buy back to take profit now. So this is where a lot of these sell order are here. All right, so they can buy back easily. So okay, if they want to sell, okay, they want to buy back, somebody has to sell to them. So the amateur traders will sell to the professional trader if price come back down. I'm not sure whether you guys can understand what I'm trying to say or not. Okay, right. Again, this is just my personal view. I could be wrong. But I think that all right, it can come down like this lah. All right, but if it cannot come down, then it goes up, and then I'm wrong now. Then I'll exit the trade. Okay, can. Let me take a look at the comments right now. Mark, do you agree that semicon is the leading indicator for the rise of XLK? Tech stock XLK is part of the tech stock now, so we can take a look at what the component stock of XLK long. Okay, so I never really check it out whether it's a leading indicator of what or not. But XLK, you can see what are the component stock in XLK. Is it over here? Oh, they changed their layout already. Let me see. Top 10 holdings. Okay. Not all. It's Apple, Microsoft, Nvidia. Consider cheap. Okay. Semicon if you want to consider. All right. Not all lah. But I am not sure whether it is a leading indicator or not. But recently, semicon is strong because Warren Buffett bought into TSMC lah, and this brought a rise, a rally to all the semicon stock lah. All right. Okay. And Valerie is asking, is there any advantage to use the 2-day time frame? So I think you asked me, is it during the physical seminar? The benefit is it gives you a different perspective. I repeat, it gives you a different perspective. So most people are looking at the daily time frame, weekly time frame. Okay, but 2-day, it can give you another alternative view. Okay, so you can see that this day dollar yen, okay, right now it's like that, am I correct or not? And give you a 2-day. What's about 2-day? You can say, hey, this is something different perspective. Okay, 2-day. Right. So this is again a 2-day time frame. This is a hammer candlestick pattern. Price broke above the hammer. Price could still go a little bit higher. Okay, but if price cannot go higher, then I believe that price will go down lower lah. All right, and hit the liquidity area there lah. All right, can so far. So this is on the dollar yen and dollar itself. Any question? Any other questions so far? So 105. Okay. So personally, recently I've been trading actually quite many things. I've been trading forex. I've been trading commodities. I traded a few stocks, but as I mentioned during the Telegram channel, I exited some of the stocks. Just a recap, like CW recently I traded Curtis Wright. Okay, so it went up like that. Okay, I caught somewhere around here. It went up like that. Okay, I exited. So yeah, and this is XLI. So XLI is industrial. Recently, industrial has been pretty strong. Can you see over here? Industrial, pretty strong, right? All the way up. So these are some things I traded. And just share with you like platinum. I also traded platinum. Platinum, how is it doing right now? Platinum, actually, if I have a short position of platinum right now. Platinum, where is it? Platinum. So it's flat today. So I have a short position in platinum also. The metals are some of the precious metal. I have a short position. Okay. And then not all are in profit. If I say all in profit, that is I'm bluffing you. Let me take a look at my trading account. So I also have just sharing with you. I also have GPB and ZB pound Kiwi lah. Okay, this is slightly underwater. I actually went for a long lah. Okay, but still hovering there. All right. Just now I exited NZB CHF. It's quite a beautiful trade. Okay, classic kind of my trade. Okay. So can you see over here, right? Okay, go up, go back to the central pivot range. Okay, the cloud horizontal line acting as a support, and then there's a wash and rinse, and then price go up like that. Then I immediately exit. This is a very classic kind of setup for me lah, for myself lah. All right. We saying, will the World Cup next week affect the market like lower volume? I don't know. I think there are some stats on what talking about the World Cup thing, but I didn't really check it out. So you want to check it out for me or we then let me know lah. Okay. So the presence of a hammer candlestick pattern overrule a wash and rinse because there was also a wash and rinse there. Oh yes, okay. I don't like hammer and shooting star. Even there's a wash and rinse. I also override it. I don't like. So I try to skip. Hammer and shooting star pattern. Yeah, I try to skip it. Yeah. So at some point in time, you know, I think previously I was talking about lumber, right? I said lumber, I think the seasonality was pretty strong. Okay. After I mentioned that, okay, price actually went down. So there's no entry because I don't like to chase market and I don't like to chase. So there's no entry. So until I see this, you know, I see this at one point in time. At one point in time, for example, I see this, you know, hammer candlestick pattern again. Okay, hammer candlestick pattern again. All right. Once again, there is a wash and rinse also. So I don't like it. I see a hammer. I don't like it. I won't trade one. So can you see over here after the price come back down again? Totally hit the stop loss level and provide the liquidity for all the professional traders over here. All right. So can you see or not? Can you see or not? Okay. All right. Especially in a downtrend, you see a hammer candlestick pattern like this. Normally I won't take one. I won't take one. Okay, so I hope that answers your question, Will. Okay. All right. So any other questions so far? So I think that's about it for today. Like, let's keep it short and simple. So at the end of the day, just a quick recap over here. All right. So for the market, today market, it is still pretty flat. Okay, so I'm watching whether this Russell 2000, it is holding. So my personal view is that maybe next week or so, the market can continue to go higher, to squeeze a little bit more on the best. Okay. Of course, there will be a time where the risk off will come. Okay, I don't know whether you're going to be a very huge crash or what. I don't know. Okay, I really don't know. But I think it will come. But right now, I think I'm still bullish for now until the end of the year. I think I state very clear until the end of the year. So don't tell me that Alex is bullish until 2023. No, until the end of the year only. All right. Okay. Darius, I didn't really cover the VIX. VIX, nothing much to cover now. Okay, today VIX, it is negative. It is still negative. Okay, it's still quite in line after a very strong uptrend upwards. Pretty normal, in line with the equities market. So you can see this VIX ratio over here. So let me just comparison. Okay, VIX. Oops, not this. Is it this? All right, so yeah, there's not much divergence over here. So at the bottom, it is actually the S&P. Top is it VIX? Let me try to do this. Yeah, okay, it's the same. All right, so yeah, there's no divergence. So pretty much in line. So there's no divergence. Nothing much to talk about the VIX. All right. So Menko is asking, right, China stock investable or not? Didn't really enter into the Chinese market recently, but okay, looking at the Hang Seng Index, it is pretty strong. Okay, it is pretty strong. I watch also. So the Hang Seng Index, okay, when people say it's uninvestable, okay, it went for rebound. All right, so again, okay, so for Hang Seng, it is quite bullish recently. Okay, so this is the first time in many months that price it is above the central pivot range, over here. Okay, so we shall see whether price can stay above the central pivot range for 2 consecutive months. All right, and then stay above. And if it could, okay, then it will be a good time, okay, to enter, be it for a swing trade or a position trade. Okay, all right. So Xiang Run said, "Do you take the?" So I didn't take the soybean. I didn't take the soybean. I think last week I mentioned about soybean. I said I'm looking to take it. I didn't take in the end. So right now, soybean, it is still consolidating. Soybean is still consolidating. Is it consolidating? Okay. Yeah, still consolidating. I didn't take. So last week, yes, I mentioned that I was looking to enter, but I didn't take eventually. I didn't take. So I'm still not in. But soybean actually, as I mentioned during the last week session, right? Soybean is actually for the seasonals, it is not too bad. Okay. From right now, November, you can't see, right? Okay, from right now until the next year, seasonality is actually going up. It's actually going up. So yeah, you can continue to monitor, but for me personally, I didn't enter yet. Okay. And Mary is asking, what's the Russell 2000 IWM? IWM is the Russell 2000. So take a look. IWM Russell 2000 ETF. Yeah, almost the same as the futures, but of course futures there's no gap lah. ETF there's gap, right? So there is asking for forex. No, because you need to understand VIX, it is the options for the S&P 500. So basically it's index. So for forex there's no VIX. There's no VIX. Okay, forex. And because forex, right? Forex there is it's not a centralized market lah, okay? It doesn't have a fixed exchange, okay? They don't trade through a exchange. So it's all over the counter. So it doesn't have any market breadth and such. The closest things that you can look at the volume for the forex, the currency pairs, okay, it is actually look at the futures. So for futures, like for example, like 6E is the Euro futures. So these are the real futures traded through the CME exchange. Okay, the closest you can get. Okay, 6B is the British pound. All right, 6C, like like eat shit in Cantonese. 6C, 6C is the Canadian dollar. 6C is the Canadian dollar. Okay, 6A it is actually the Aussie. 6J, all right, yen. 6N it is the New Zealand Kiwi dollar. 6S is the Swiss. Okay, so these are the closest you want to take a look to use on volume profile and such, right? Use the currency futures. Okay, that's the best you can do. All right. I hope that answers your question, Darius. Yeah, so basically I just look at the cloud and CPR as well. Okay. Any other questions so far? Okay. No, not really. So there is for me, I just roughly have a feel, right? What is the euro doing? So euro 6E very similar to euro USD. 6B is very similar to pound USD. 6A is very similar to Aussie dollar. So it's pretty correlated, very correlated. So I use that to aga to see how the market will move lah. All right. So if it cannot work on the the minor pairs, okay, or the cross currency pairs, okay. Any other questions before I call it a day? So how's the market today? Still pretty flat, huh? So okay. Another one, what is it? Any other questions? So before I call it a day, let me take a look. This STKL. I will even forget the ticker. Anyway, just to show you what I'm doing, okay, I didn't really show. I am actually trading this some opta STKL. Again, this is not a recommendation to trade. This is a small cap, basically some opta to natural food product, organic lah. Okay. So how many of you actually heard of this company before? Some opta or consume their product before? I don't know lah. Soy milk, coconut milk, oat milk, almond milk, organic product lah. Anyway, not important. So yeah, I am actually have a long position on some opta. This is a small cap in line with my analysis on the small cap, which is the RTY lah. Again, I could be wrong. So we shall see how it goes. STKL. All right. So okay, this is also a wash. Okay, and then a rinse. So I entered actually yesterday lah. All right. Actually quite stressful to tell you my live position. Then if I'm wrong, then no. Lao kui that kind. Anyway, yeah, I'm just sharing with you. It doesn't matter lah. This is just one position that I'm looking at. Yeah, I have a position. Sorry, I have a position. All right. Okay. Doesn't mean that I'm right. Don't copy me. I'm just sharing with you since I know have a bit of time and such. All right. So with that, I think I shall call it a day, shall we? So yeah, so 1 hour, 18 minutes, and thank you so much for staying with me until 12:47 a.m. So I shall see you again next week. So once again, I hope you enjoy my session tonight, get some clarity on my view on the market. And if you think that this is of value to you, you learn something new and such, right? So just type value in the comments. Just type value in the comments. Okay, just give me some support. Give me like, share, and comments. If you want to give me angry face, that is fine as well. The key thing is you engage with me. Let Facebook and YouTube know that you want to know and see more of market-wise content. Okay. Having said that, once again, thank you so much. Good night. Good weekend. Wan an. Bye bye.